Consumers are running scared. So, what do you need to do as a real estate investor to prepare for what could be a market correction and a recession? We're talking to Michael Zuber here on the Fearless Flipping Podcast. If you want financial freedom, time freedom, and want to leave a legacy for generations to come, you probably have heard real estate investing is the place to do that. How do you get started? What do you have to do? When's the right time? If you are looking for those answers, you've come to the right place. My name's Kyle Stanley, and this is Fearless Flipping. My mission is to help you learn this business and conquer real estate investing. Hey guys, welcome into the Fearless Flipping Podcast. I'm Kyle Stanley, and we're talking today about the coronavirus. About time that we actually dropped some lines about this. Michael Zuber is the only one that I'm really hearing about out there that's super involved in talking about the coronavirus and how it's going to affect the real estate market. There's a lot of speculation out there. There's a lot of things that people are just kind of, well, this could happen, this could happen. But Michael is very strong in his opinions about what he believes will happen. And if you haven't already seen the episodes in which Michael was already on our podcast, they're on episode number 21 and 22. Just go back and watch that. You can hear his story and you can see just how right around 20 years of experience has brought him to where he has his opinions today on what could happen because of this. It's a lot based on consumer-driven scarcity mindset and how that can affect essentially what you're doing in your real estate business and how you can prepare yourself to start to set up cash, to set up a mindset, to set up systems and marketing in place to be able to really capitalize on all this. So let's go ahead and jump right into it here with Michael Zuber. Hey guys, welcome into the show. Today's episode is brought to you by our Airbnb Profit Calculator. We all know that you're savvy investors and you are looking to make money in your sleep, but did you also know that you can make more than just $200 per door? What if you could, in fact, make over $1,000 per door or maybe even more? And yes, Airbnb really is producing that kind of fruit for me. Just go ahead and download. Your first step is going on to fearlessflipping.com and download the Airbnb Profit Calculator for absolutely free. See what you could potentially make. Go to fearlessflipping.com and you can download that for free right there on our homepage. Welcome into the show, Michael Zuber. Guys, if you haven't already seen the episode, actually 2 episodes back when we were really first starting to get this podcast started, it was episode number 21 and 22. Michael talked with us a lot about rentals. He talked about his story. So if you haven't heard it already, you definitely got to go back there. He is the author of One Rental at a Time and the podcast for One Rental at a Time. And what I love about right now is collaboration. Michael, I just literally called you 10 minutes ago and was like, can you jump on and talk about this coronavirus thing? Because I just don't feel like there's anyone talking enough about it. And rather than me go out and try to become an expert on it, you already seem to be doing all the research. So save us both a lot of time and let you just kind of share exactly what you think. And guys, what I would really suggest, no matter what, is go to Michael's YouTube page or podcast One Rental at a Time and hear everything he's talking about in terms of especially the next 6 to 18 months with the talk of a recession. But anyway, that's a long intro. Michael, welcome into the show.
Thanks, Kyle. This is gonna be a lot of fun. I like the debate. I like answering questions, and the more we talk about it, the more we learn together. And we both want to help people. So I was happy to say yes.
Cool. Well, hey, one of the things that I just really want to admit, and I know I tell this to my audience a lot, but I'm going to admit this to you too, is that I'm still a very brand new investor. So a lot of this is a learning curve for me. So I didn't go through 2008. I didn't go through anything related to the swine flu, which I know was really kind of one of the last major scares. And I don't know, from my perspective, Michael, I just kind of feel like this is another thing that comes and goes, but for some reason really impacts the way that people look at their financial situation or their real estate situation. So is that what you see too?
Yeah. So, one of the things that I enjoy doing is because I do have 30 years of watching the market, something I've done every day. And I mean, Saturdays and Sundays as well, is the first thing I do when I get up is I kind of try to figure out what's going on in the market. Right. And this has always been really with the angle of 2 things. One is I want to know what the cost of capital is because I'm a real estate investor. And in most instances, the largest expense line for me is mortgage. So I'm always trying to figure out what's going on. Are rates going up, rates going down? Is lending getting easier, getting harder? I'm trying to figure that out. In today's market, it's pretty easy. Rates are going down.
Yep.
What people miss is I am trying to figure out what the consumer is doing. The consumer drives the American economy. It's 66 to 70%, depending on which article you read, but it's massive.
Mm.
And if you can understand where the consumer lies on the fear versus greed spectrum, and more importantly, see when they change their mind, you can make explosive growth in decisions, because when consumers move or pivot, they typically do it in mass. They typically overshoot the situation. And if you've read my story in One Rental at a Time, I made two amazing calls that some people will call lucky. I don't care what you call it. I call it skill, because I look every day. In 2008-ish, we sold all our single family homes and moved to apartment buildings. We looked like an idiot for about 9 months. As you know, the first property we sold on Norris Drive went from 260 to 300. So by no means did I call the peak,
Mm-hmm.
but I knew we were close. And oh, by the way, I was right, because that house that traded at 260 got to 300 went all the way down to 75.
Wow.
So that was the first thing we did. And again, we moved into apartments. Sure, my net worth went down, but I don't care. I've always been interested in cash flow. The other thing we did is we went all in 2010, 11, when banks told us no, when everybody was scared because money markets just went bust. And we were buying everything we could, hand over fist, for land value. And boom, the stuff came back. So watching the consumer, watching when they make pivots, because they do it in mass, it's never one at a time, can be very, very profitable. So that's what I enjoy every day. And I talk about it, like you said, on my channel, One Rental at a Time.
So now, with that being said, do you see what, tell us what you see that consumers are doing?
Yeah. So let's just talk about it, right? So first off, I talk about and read a lot about this virus. Okay. I am not a doctor. I am not talking about the medical implications. I'm not talking about, hey, it kills less people than the flu. I'm not talking about any of that nonsense. Frankly, it doesn't matter to me. And I think it's irrational arguments. What I am interested in is, what is the consumer doing? And the consumer is increasingly doing these things. In most of the country, well, yeah, most of the country, people now are going to stores and seeing empty water stacks and toilet paper stacks. And, consumers are changing. And frankly, the CDC just yesterday told people to do this. If you are over 60, stock up. I'm like, oh my God, I can't believe the CDC is saying this, right?
Mm.
So this is going to increasingly force consumers to change their behavior. The other thing we are seeing is Chinatowns are increasingly not getting participants. People are not going to Chinese restaurants. People are making conscious decisions. Now they're not flying. There are ghost flights going on. And it's just, the consumer is drastically changing their processes. And you can argue this is not an impact, or this is not a big deal, or whatever, but you are missing the point, and the masses will run you over, and you will miss the opportunity to make strategic decisions to better your financial future.
So when you say that was really interesting to me, the Chinatowns, why are you looking at that? Or did that just kind of come across your desk?
It comes across my desk. I'm in the Silicon Valley, so it's very, there's a decent Asian footprint. My wife is Asian, so we go to Asian restaurants a lot. And I've seen occupancies from some of our favorite places that were always full down to 15 or 20% at peak hours. So it's just, all these little indicators are showing me that consumers are changing their behavior. They are scared, and you can argue it's rational or not rational. That's waste of energy. It's happening.
Yeah.
So when you go back and you think about real estate, I mean, it is going to have huge implications. And I agree, in a window, I think 2020, but so was the window at the peak. So was the window at the bottom. And if you want to get up and make some strategic decisions, the consumer is scared. They have went, just 3 weeks ago, we were at the top of the market. Everybody was fat, dumb, and happy. 3 weeks later, market's down 6,000 points or whatever it is. Consumers are changing behavior. I see job losses in tech going up, job losses in travel going up. Santa Clara County just yesterday announced landlords cannot start evictions if their tenants are impacted by the virus.
Yeah,
This stuff
crazy.
is about to get irrational.
Yeah. That's crazy. I saw that same article. I was just like, how do you even know what's impacting it? Well, anyway, that's a whole other conversation. But I guess my question is, you're talking a lot about consumers, you're talking a
Mhm.
lot about the market, and there's always, to me, that disconnect.
Mhm.
Well, maybe not a disconnect, but there's some people that believe the housing market
Mm.
is directly connected to the stock market or the consumer market. And then there's other people that say, no, it really doesn't have any sort of connection. It just, in 2008, it just happened to both happen at the same time. So
Mhm.
where do you stand on that?
Well, let's talk about it just rationally, right?
Mhm.
Because a lot of people throw these things out there and they have their opinions, but they've never spent 30 years looking at it.
Sure.
So, do you know what the largest expense for most homes is?
Largest expense, mortgage?
Yeah, it's their mortgage or rent. It's
Mhm.
shelter. Shelter is the biggest expense. Okay, fact, right? Can't argue. It's fact for most people. Um, what are you going to do if you are out shopping for a new home today and you're scared? Do you think you are going to sign up for a bigger house payment or a bigger rent payment? Or are you going to are you going to retreat and go, hey, you know what? I'm not going to look in March. I'm not going to look in April. I'll look later. It's an
Mhm.
easy decision to delay,
Mhm.
right? There's no real downside from the delay. So there are going to be people that are in escrow now that are going to cancel escrows because they're like, ooh, I don't want to leave the house I'm in now. I know it. I know the neighborhood. I don't want to sign up for a bigger mortgage payment. I'm a little nervous about my job, blah, 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 blah. I'm not going to go to the bigger house. People are just going to go, hey, I don't know what I don't know. I don't want to increase my monthly nut. And it's a rational decision. It's just going to happen at the individual level in masses. And it is going to impact the real estate market. And this is weird because in January, I was like, man, we need some inventory. We can't sell anything. Prices are going to go up. Demand's going to fall off a cliff. But the interesting thing about this is listings are going to fall off a cliff and people don't see that coming. And that's another interesting factor because, right, if you were going to list your house, most of you are going to clean it up and they're going to have open houses, right? I mean, that's just rational. Do you really want 30, 40 strangers walking through your house where somebody could sneeze or cough and suddenly you're infected? No, this freaking bug is hardy. It stays around for a long time. And the last thing I want to do is invite a bunch of strangers to come touch my stuff. So people that can or thinking about moving or trading up, you're not going to list today. You're going to go, you know what? We're going to sit tight. I'm not going to let any strangers in my house. And frankly, the CDC is basically telling us this. Santa Clara County just said no gatherings over 1,000 people. The San Jose Sharks have 3 home games. They're going to have to play in front of an empty stadium. This stuff is real. And you can argue if it's more or less than the flu, it's the wrong argument. Consumer behavior is changing.
Mm, wow, that's impactful. So I guess from a investor standpoint, because really that's who's listening right now.
Mhm.
Um, where should I'm a f- I'm flipping houses, or I'm
Yep.
wholesaling houses, or I'm out there buying, rehabbing, refinancing.
Mm.
I'm getting one rental at a time. It doesn't matter what strategy I'm using right now.
Mhm.
What do I do to set myself in a position of abundance and not scarcity?
So I have 2 answers for that. One of them is going to suck, and the other is going to be awesome.
Okay.
If you are flipping high end owner occupant homes, get ready to hold your inventory for a long time
Wow.
because owner occupants are going to be scared. Your house can be beautiful. If you don't get that thing closed like this month, it is going to get worse from here.
Hmm.
Fact.
And
This
when you
is
say
going to
high end, let's quantify that. So like Fresno, the median is right around 260. What would be considered high end?
above the median, above the
Okay,
median.
anything
So
above the median.
Fresno,
Wow.
yeah, I mean, usually I say 2x, but I think this is going to be anything above the median.
Okay.
So in Fresno, if it's 260, call it 300. I think you're still safe below the median just because there's no inventory. So above 300. In my market, there will be flippers that go bankrupt because they're flipping $1 million homes with 10 and 12% hard money loans. They're
Mm,
going to go bankrupt. It's over
wow.
because it's not affordable here. So Fresno is definitely better, far more healthy than the Bay Area, but the answer stays the same. If you're in Fresno and you're looking for that gorgeous house, you're just not going to make the decision today. Why? Why would you decide today when you don't know what's coming? And again, I think Fresno is going to weather this virus way better than the Silicon Valley, way
Good.
better.
Okay.
Um, but it's going to have an impact. Buyers in Fresno are the same. They're going to be nervous, and maybe they're not nervous today, but they'll be nervous by April 1st is my guess. Because it's going to hit the news over and over and over, and CDC is going to do this and do that, and Santa Clara is going to cancel games, and probably San Francisco's next, and then LA, and you're just going to be bombarded with negative things that scare the daylights out of you. So flippers, I'm sorry, you're in trouble. Buy and hold landlords, you are about to be given a gift that I did not see coming. This thing will pass, and that's the beauty I have about doing this for 30 years. I saw the dot-com crash. I've seen 9/11. I've seen 2008. I've seen swine flu. I've seen them all. This is like a combination of 9/11 and the '08 financial crisis in one big ball. Wow. It was sudden. It was out of nowhere. Nobody can truly see it coming. Very 9/11, right? Then the impact is going to be significant, but it won't be in housing, right? The '08 crisis was very housing because mortgages were bad, liar loans, all of that. So housing has fixed rate debt. If you lose your job, sure, you're going to be in trouble, but there are creative ways to get out of it, which is why I think wholesalers and buy and hold investors and why I'm excited. I'm going to buy as much subject to and owner finance deals I can in the next 9 months. I was hoping originally to get 5 houses. I now want 20 because I can hold out. I can hold out and keep those and keep my cash ready. And again, people, you should watch what I'm doing and saying. I told people 6 months ago, I'm selling apartments because I want to raise cash, and you all made fun of me. Sorry, I look like a genius now, right? So again, right, proof positive that I do what I say and this stuff happens. So if you're a buy and hold, if you're a wholesaler, get excited. I think your cash buyers are going to disappear. You're going to have to get much, much better at creative financing. Cash is king in an environment like this. I'm going to buy as much property as I can where I put out $10,000 or less, right? Because I will just hold it. This will pass. It will probably pass this year, but it is going to be much more severe than you think. People that clearly are changing behavior, but I'm excited. When the consumer behavior changes and you see it coming, you can make tremendous buys. And, I will be documenting as we go along. I will get as many subject to deals as I can from people who lost their job or get transferred. I will buy as many owner finance deals for people that are having a hard time and they just want consistent monthly income. I'm going to own more Fresno real estate. And I'm excited by what the hub, which is where you are today, can do, because I want that office to be a resource to help people. That was the whole vision when we started. And, we're going to do door hangers, and we're already doing texting and cold calling. And I want to invite more and more people to come to the hub that want help. And, so it's going to be a lot of fun, I think.
Yeah. A little background there. By the way, I have tons of questions as follow up on that. That was like, if you're driving right now, if you're listening, if you're watching, and you at any point just kind of glazed over or got a text and we're reading that instead of listening, you need to rewind and listen to that again, because there's so many things there that I think can really change the trajectory of what you're doing. But a little background, the hub, just in case of those of you that don't know, go on to Michael's page, One Rental at a Time. He's actually got a walkthrough of our office here in Fresno. If you do live in Fresno, come check us out. We're off of Van Ness and McKinley. But for those of you that are wanting to dive in with what Michael just said, I want to do the same thing. So really quick, I have 3 things that I just wrote down that I want to ask you as follow-up. Really quick, clarify that 10K. You said I'm going to be spending 10K or less. Is that subject to? Is that putting money down?
Yes.
Like, what do you mean there?
It's basically cash out of pocket. You have to have some number, right? So let's just pretend I have $500,000
Mm-hmm.
and I think cash is king. I could go out and buy 5 houses cash, right around 100 grand, but then I'm done. Instead, I want to look for opportunities where I can deploy micro money. And I picked $10,000 because I think that's a nice goal. Would I spend 12? Sure. Would I spend 15? Maybe. And what that means is total money. That means wholesale fee. That means down payment. That means make ready, people. That absolutely means make ready. I want to make sure any asset I add to my portfolio, I can hold for the duration of this event, which could be all year. So I'm only going to put 10 grand into each little thing, probably subject to or owner financing. It's going to be a huge acquisition. I was getting ready to do this, but I thought it'd be 2022 or 23. It came a lot faster with this Black Swan event. But yeah, that's what I mean by 10 grand. It's
Okay.
just a target of mine.
Okay, cool. I want to get into subject two a little bit more here in a second, but then I
Sure.
also want to come back to what you said about flipping.
Sure.
If we're in again, we're using Fresno as the example. If we're in a market like Fresno where the median's 260, you're
Hmm.
saying, just for clarification, you're saying higher end above 300 is really where you're getting into a danger area. What about those that are flipping, like a lot of the people that you and I know,
Hmm.
under 250? You know, they're doing ARVs of 200 even. Do you think
Hmm.
that will get impacted?
I think it will be impacted. It will be, yes, it will be impacted, but kind of differently, right? Today, I'm in that market as well. We get 5 to 10 offers in 2 weeks. We're probably going to be getting 1 to 2 offers.
Mm,
But does that really impact us? Not really, because all you need is one to get the deal done, right?
exactly.
But yes, volume of activity is going to go down. Buyers are going to go down. If you're investing 200 below in a market where the median is 260, you're fine. You may hold for an extra week or 10 days. You may
Got it.
have more inspections and credits coming, but you're going to get your deals done,
Okay.
in my opinion.
That's great to know. And then if you're not, if you're going to be above that, meaning you better make sure that there's multiple exit strategies, including cash flowing, if you're going to hold it for the long term. Um,
Yeah, yeah. Your hold period probably was, again, January was probably 3 to 4 weeks before you got an offer that you accepted. You better be ready to hold for 4 or 5 months. And most people do that with hard money, and they can't. It's a very dangerous place to be flipping when the consumer goes against you. And it just went against you. I'm sorry.
wow. Wow. Okay. You said that you're going to go all in subject to owner financing. Any
Mhm.
advice to anyone listening right now on how they can do the same thing? How can they get started in that kind of market for those exit strategies?
Well, first off, right, so owner financing or seller financing, right, it goes by different names, versus subject to are different strategies that sometimes are looped together under creative financing. Seller owner financing is just easier to talk about. Typically, there you have to find the right seller. And typically, that means they own the property free and clear, which typically means they're older than 60. It typically means they've owned it for decades. And they are in the stance of, you know what? I want to enjoy the rest of my life. I'd rather turn this thing into income versus being a landlord. So let's work something out. So the target for that is free and clear property. Okay. So that's them. If you go over to subject to, it's kind of the exact reverse. Subject to is a creative part of the real estate market where there is a loan and you are taking the property over subject to existing loans. You have to be very careful. You don't want to do this typically with properties that have adjustable rate financing because ARMs will kill you,
Right.
right? When they reset, you want fixed rate debt. You would typically want to buy this from someone who has fixed rate debt with a 3 or a 4 on it. So you're rewarded for that. There are all kinds of rules. Banks can call loans. It is a very complex thing to look at. There's a gentleman putting out a lot of great content who was just at the hub last week or the week before, Pace Morby. That if you don't know him, you should go check him out. It's an evolving market. I think it's going to be a lifeline for people who lose their job in this upcoming adjustment slash recession because they're like, I just can't make it anymore. I can't afford it. I'm in the entertainment business or travel business or hotel business or retail or restaurants or whatever, and I got let go because my landlord or my boss can't pay the bills.
So how do you find those deals?
Typically, you're going to be you got to seek them out. It's going to be pre-foreclosure list is probably the best thing to go for. Identify people that are 60 days or late. My hope is we can, again, selfishly in Fresno, I'm hoping the hub starts to dominate an area or avenue of people who want help. So I'm hoping people are coming to us. But if you're watching this from across the country and looking for a list to buy, it is pre-foreclosures is the best opportunity because they're behind. You can assume there is some kind of event that caused that because when you have an interest rate of 3 or 4% and you've been there 3, 4, 5 years, you're generally not purposely missing mortgage payments. So that's where I would start.
Okay, cool. So just in summary here, the things that I'm understanding, if I'm sitting here and listening as an active real estate investor, I better be flipping under the median if I'm flipping at
Yes.
all.
Mhm.
I should start looking for subject to properties, and I should be storing cash so that if it is going to take 5, 10, $15,000 to get into a great deal, I've got that cash available. The last question I have is going to be two parts. And I
Mhm.
think I would be remiss if I did not ask this question as an Airbnb guy. Um,
Mm.
the one side is, and we can only speculate what human nature and human habits are, right? But
Yep.
one of the things I do have to know is a lot of people wonder, okay, if there's a market crash, how is that going to impact the rental market? Do you see rents staying the same? Do you
Mm.
see them going down? Do you see them going up? And then the second part of that is, do you see it impacting the short-term rental market as well?
Wow. Yeah, definitely two different questions. So let's talk
So
about
let's start
being a
long-term.
land.
Yeah.
Yeah, long-term rentals. That's where I am. That's how I retired at 45. All of that stuff. Um, Again, you just need to listen, guys. I've been telling you multifamily was overpriced for some time. There are so many people that got into multifamily with cap rates sub 4% that are about to suffer immense pain because occupancy and economic occupancy are very different numbers. Occupancy means how many heartbeats are in your building. Economic occupancy is how many heartbeats with checks for rent.
Mm.
And they are very different numbers. And if you've only been investing the last 10 years, you do not know what it feels like to own apartments in a recession. I can tell you firsthand, it sucks because tenants stop paying for any reason. In California, it takes 60 days to get people out, maybe 75. And if this gets really bad, the courts get backed up and it can take 90 days. I've been there. I've seen it. I have the scars to prove it. So rents are not going to be going up, at least this year, in my opinion, in apartments. They could go up in housing because housing, what you're going to see is people are going to double and triple up. So houses of good quality could see some rental increases this year, but not apartments. So does that answer the long-term question?
Yeah, it does. That helps out.
All right. So Airbnbs. Airbnb, you have to be very, very careful because when you talk in broad brushes, which Airbnb uh, can easily do, you can be misguided. So I'm going to talk about Airbnb in two different areas. And both I think are certain. If you are doing an Airbnb in a vacation hotspot, you're in trouble.
Yep.
Just look at airlines. They're flying ghost flights. Um, it is fallen off a cliff. CDC is telling people over 60, don't get on an airplane. I mean, there are amazing things being said by agencies that we're supposed to know and respect, who you would hope know more than you and I. And if they're telling you not to travel, guess what? You're not going to travel. So if your Airbnb is in a hotbed, I don't know, the Caribbean, somewhere where you got to go um, via an airplane, oof, you're about to see some significant cancellations, in my opinion. Now, if your Airbnb model is built in a market like Fresno, where in general, it's not, I mean, no disrespect. I love Fresno, but it is not known as a vacation hotbed. I mean, that's just hopefully a fact that nobody's offended by. I don't know. People get mad at me all the time. But you're going to Fresno and staying in an Airbnb because you have to get to Fresno, and you're choosing Airbnb because it's a great economic reason. It's easier to live in. You have more space than a hotel. You got a backyard. You have your place for a car and all of that. That stuff generally will not change, and it won't change in mass because you're going there because of a wedding or a funeral or a job thing or whatever. Those things may fall off slightly, but it should not be meaningful. Um, so again, I don't like to talk about things in mass because Airbnb is a dangerous topic because again, you have Airbnb serves two niches and I think they're going to be vastly different outcomes.
I 100% agree. And I actually have some case scenarios to back it up with what you're saying, because I've got a good friend of mine who runs a pretty on average $3 to $4 million business in Newport Beach for
Mm.
Airbnb. And he texted me the other day and said, I just about vomited. I had $22,000 of reservations canceled in the next 3 days.
It's going to happen.
$22,000. That's scary. Now, luckily, he has recouped a lot of that. Those people that canceled, a lot of those got rebooked by someone else. But meanwhile, here in Fresno, I've got 9 listings in Fresno, and we're on pace to have our best month as a business. We are on track in terms of our occupancy rate is the same as what it usually is. And we've only had 2 cancellations from coronavirus, again, knock on wood here, in the last 2 weeks. And so,
Yeah.
do I think that's going to change? I do. I definitely think there's going to be more cancellations, but I'm also confident that based on what you just said there, that people are coming to Fresno because they have to. They're not going to miss their cousin's wedding. They're not going to miss
Mm-hmm.
jobs are not going to just stop sending people to Fresno to get paid. They're going to keep on doing that. And for that
Mhm.
reason, I think that this market is in a really good position. So,
Yeah, I agree. I think in California, the Central Valley will, I don't know, survive, thrive, whatever you want to call it, the best, because it's kind of its own community, its own metroplex, and it's based on food and distribution, and both of those won't be in fact. You still got to eat. In fact, next day shipping is going to go up, not down. I think Fresno economy, it will feel it, but it's not going to feel it like the Bay Area, man. The Bay Area is going to get freaking hammered. So I'm very excited to have my investments in Fresno. I look to add a lot more stuff, but I want to go back to what you just shared with your friend and your stats.
yeah.
Here's my guess by April 1st. Your friend who just said they had $22,000 in cancellation in 3 days. My guess is he has over $100,000 in cancellations by the end of the month. And you can hold me to this. I think that's about what you're going to see. You're going to see two onesie, twosie, threesies here and there, and easily fill those back up, because you're just in different markets. Fresno is a have to, Newport Beach is a want to, and in an environment where the consumer is scared and we haven't even started to see consumers vastly change yet. The majority of the country hasn't really. Most of the country thinks this thing's a hoax, and that's going to change, given everything I've read, and consumers are going to change. So Newport Beach guy, I'm sorry. Tell Kyle by March, what is it, April 1st, if you had $100,000 in cancellations, I think it's coming. And Kyle, I think you're going to be just fine.
Okay, cool. Well, the big takeaway I want people to have here is that they need to figure out what type of market they're in. And they need to understand that if you're an investor, this is not the time to go run away and get scared. It's the time to prepare. It's the time to be financially set for anything that is going to allow them to be able to take their business to the next level. And I think people are in a much better position today to be in that mindset than they were in 2008, which I'm really excited to see a lot of people like you and I capitalize on. So, Michael, share with us how our audience can get connected with you. And then, of course, if you have any sort of last thoughts here, would love to hear that.
Yeah. So again, the best way to get a hold of me is on YouTube. I have a channel called One Rental at a Time. I post on average 2 to 3 videos a day of original content. It is what I do in the morning. It is how I give back. All of that content that is over 5 minutes in duration gets turned into a podcast on all the different platforms. Again, One Rental at a Time. And just closing thoughts. Again, when the consumer changes behavior, true investors get excited. And I see, again, a great opportunity to profit in this changing environment. This is the time when investors step up and they know their market. I talk about it all the time. Learn your market, understand what a bad, average, good, and great deal is. And let's just make the commitment together, Kyle, that you and I will only do great deals between now and the end of the year.
I like that pact. Let's do it, Michael. Hey, this has been one of my favorite conversations I've had so far on the show. Thank you for helping our audience to be able to conquer real estate investing in some interesting times. Okay, so the podcast show notes for this one are fearlessflipping.com/coronavirus. And I think you all know how to spell coronavirus at this point, so I'm not going to have to spell that out for you. Let's just really see what happens. I really am interested to see if Michael is on point with what we're talking about with flipping, subject to even short-term rentals with the Airbnb space. I really encourage you guys to look at your market, figure out, again, I talk about all the time, are you in a want market or a need market? Are you doing high-end flips? Or are you doing low-end flips? Really figuring out where you're at in your strategy, what your road is, what your lane is for your real estate investing strategies, and figuring out, do you need to make an adjustment or are you in a good position? So these are all things I think, because of what Michael just shared with us, it's time to start evaluating and preparing for what could possibly happen to set yourself up for success. Thanks for joining us here on the Fearless Flipping Podcast to conquer real estate investing.